China is a country known for accelerating growth and decades of booming times. Well, along with the rest of the world, the party is soon over. Their growth will accelerate faster than many Western nations, but their projections have needed to constantly be revised downward toward reality. Today, we see a desperate attempt to reverse the slowdown, which is doomed to fail. You came here for the truth, so let me unveil that for you. Today, I have a relatively quick video to get through, talking exclusively about China. I want to show you some of the good, some of the bad. I want to look into this country, but before that, I just wanted to say a couple of things. The fact that China is slowing down and that is admitted doesn't necessarily mean that the long-term prospects of the country are negative. We're looking at a country with 1.3 plus billion people, and it's growing all the time. We are seeing that this country consumes commodities like no other. Their economy has expanded over the years faster than many other countries, and this will continue to be the case for a long period of time, for the foreseeable future. But along the way, there are going to be setbacks that cannot be excused of China or any other country. This is going to happen. We have crashes, we have recessions, we have worse. But the long-term prospects are positive for China. They're making all the right deals globally, and they are starting to upset some of the other people on the other side of the world because they've grown very fast in a relatively short period of time. Now, their alliances are also countries that the US and the West tend to shy away from. China is saying that's a perfect opportunity to develop a partner. So they're really smart at acquiring all of these different partners around the world, creating infrastructure, building businesses, and collecting land and real estate and everything that they can get their hands on. So this is very, very smart. And the economy is generally opening up. They're trying to get more foreign investment, and I'll talk about that more in a moment. But what we can see here is that they're doing what they can. Now, that was the introduction. I wanted to preface with that here and begin by taking a look at this. It's directly from the actual government of China's own website here. The premier had said a few things I thought were interesting. It's a translated article, so it's not going to be exact, but hopefully this will be fairly accurate. I'll just touch on a few points and then I want to move on. All right. So what they're suggesting within this speech that I read is that they are going to be very responsible. They're going to engage in public works projects. All right. If I could just quickly find this here. The fiscal policy should be more active. Okay. They're going to try and reduce taxation and fees. That would be good as well. What I can see here is that they also want to engage in stimulus measures, but they want to make it very direct. They don't want to have this great flooding type of strong stimulus. They want fine-tuning and coping with the uncertainty of the external environment. This is what China is supposedly going towards. But haven't we heard this from the ECB, from the Federal Reserve, from the Bank of England, Bank of Japan, and everybody else? They're suggesting they're not going to go the way of Japan and buy up all the bonds, buy up all of the shares, the ETFs, and everything else. But they are actually engaging in a lot of these policies that they're also very public about. So we have to remember what is a political speech and what are the actions of the countries or the regions or whatever. That goes with any country. Okay, so also within this, just, it basically talks about a few things that they want to do, expand this and that, but at the same time reduce taxation. And that's really where I start to get a little bit iffy about. If they're going to tell me that you're going to increase taxation by this much money and your taxes are going to go up, but we're going to give you this and that service, that's fine. But when you start suggesting that you're just going to create more out of thin air, it doesn't work like that. They always get it from taxation. All right, so further along in this, we're talking about this sound monetary policy. It should be tight and moderate. That's what they suggest. And if you look, that central bank, the People's Bank of China, is expanding their balance sheet. Not to the degree that they were before, but look at where it was back in, let's say, 2010. Look at where it is today. You get the picture, all right? So they have been doing this all because they need more money to flow. They need liquidity right now, or it's going to stagnate, it's going to get stale, and then we're going to have some serious issues. This is no different than the Fed, Bank of Japan, and so on. There's more in this here, but it's a lot of jargon. It's a lot of wasting of your time. So let me move on. This article out of Bloomberg talks about the People's Bank of China cutting the reserve ratios 3 times this year and unveiled a range of measures for the private sector and small businesses, a little bit of what I touched on previously. When you tell me that you're cutting the reserve ratios, which are already historically so low, you know that you're desperate. You know that you want to get money loaned out to people who don't normally have the ability to get that. They're not credit worthy enough. Suddenly, the reserve ratios open up the doors to more people. That shouldn't be the case. It's not, that's not a very good thing at all for anybody, because it ends up taking the whole system down. There are big risks that people are taking today, whether it is in China or anywhere else. It's talking about the trade issues and what they are doing. They suggest here that there's no broad-based monetary easing. However, I definitely disagree. They're all doing it. Every single country does it. Now, on the other end of the spectrum, we can look at the very smart moves that China has been making, as I alluded to, that when you look at their partners, they seem to be a lot of the countries that the West doesn't want to deal with. And that leaves them open for a very good bargain. So right now, this article here is just basically talking about a $50 million satellite that China has decided to set up for them here, and this is the type of investment that is very beneficial for them. Also, at the same time, Argentina is saying, hey, people are building stuff here, it's investment, maybe creating jobs, and so on. So this is beneficial. They're doing business, they're making smart moves, they're going around, whether it's Africa, South America, with Russia, with other countries, doing business, making money, creating jobs, and maybe in the long term they want to, a lot of people suggest that they want to basically just take over. I'm not saying that at all. What I do know is that they're buying a lot of infrastructure, and for an individual country like the US, if a country like China, I'm just only finger pointing because of this particular video, but any country that comes in starts buying up a lot of infrastructure, they start buying a lot of the assets, they own a lot of the businesses, you start to have a concern for, in the event we have a clash between both sides, that's going to end up very badly. Okay, it's just very clear, very obvious to me, and I know that you definitely feel the same. However, there's always going to be a good and bad to this. I think China is making a lot of smart moves today, and it's just really going to be a longer term scenario, because in the short term we can see that they still need a lot of investment going in. They still need to build this country up. We're talking about 1.3 billion plus people. There's a lot of people moving from the rural areas to the cities. That is very bullish for commodities. That is going to be a good thing for investment in general. However, along the way, we will see bumps in the road. That is just a fact. So that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel, so I do appreciate that very much. And if you want the financial education you were not taught in schools, well, these 2 books have it all. You can actually get these at the link in the description below. You're actually going to be able to look through the pages for yourself. And if you're more interested in the audiobook version instead, a lot of people are in fact, this is available at themoneygps.com.